Hi guys. All right, we are live. Let me share the link because the previous one didn't work. I will share it here. New link. Not on noise. I will share it. I cannot reply to myself on noise. Wait. Up. So yeah, a new live show. Buy when there is blood in the streets. Is the title, and I can edit the post in noise, which is of course also nice, that you can edit a post. And let me do that. New link above. Voila. So yeah, tough times in the markets. COVID was ravaging the economies in the world and the freedoms of the people, and then you think it's over, you hope it's over, and then a war starts. Yeah, that's of course very bad, and also has thrown um, well, my plans and my investment strategy in the water because I had really invested that a bet on that the economy would recover and the markets would recover more and more after COVID. The COVID scare fades away, and all the sanctions or the measures go down, and people can travel again and can trade freely again with each other and can come out again. But instead, what happens is that there is a war starts. So of course, that's for me. I was long crypto, long airlines, short commodities, because I believed commodities already went up during the COVID too much, and I made several videos around gold that it is yeah, overvalued, and that it's only due to COVID that it went up, and that it's still in a bear market, will likely go down. But then when the war breaks out, then of course like these commodities go even higher, and that's what happened. And so my short on gold, yeah, start to lose money. Same time I lose money with my stocks. So and crypto goes down. So yeah, I had an important lesson to learn, and I just shared a video around that, how I have um, changed my portfolio strategy and allocations. This show is about your allocations. I asked a month ago when I announced I would do another Master Investor show. If you share your portfolio composition, I will give my feedback on it, whether I think it's a good portfolio or not. And I will start doing that. I think that's very interesting as an investor. Life is beautiful if you can invest your money well and you have a good return on your money, but it is also a difficult task that most people fail in, because you have to go against the grain. You have to think different than how the masses think, because the masses, they lose money in the market. If you want to make money, you have to actually think the other way. And for example, when everybody is buying and is positive about something, actually that means that you should not be buying because prices are going up already a lot, and there's a shortage of something, and you should be selling in that market, and sell to the 90% of people that want to buy. And inversely, when everybody is selling and there is an oversupply of something, you should be buying. You should be that 10% of the market that wants to buy something that nobody else wants to buy and wants to sell, and that's difficult. And we see that again and again. But as an investor, like crises are really an opportunity to buy, whereas celebration, I mean, people are celebrating is and people, that's actually where you should be negative and where you should be selling. And so when everybody is partying and lifting their champagne glasses, how good the markets are and how much more it will go up, you should be the one that's negative and is actually selling and skeptical of further growth. And so you'll not be partying. Huh? And if you want to be partying, then you will pay the same price as they do, which is likely losing a lot in the near future. And inversely, yeah, when everybody's negative, yeah, you should be buying, and that's basically your way, your time to be positive when everybody else is negative, and see the positive. And so that's what leads me to here buy growth stocks that I did a lot. The funds of ARK invest a lot in, and I've been selling commodities also because the market is very pays a high price for commodities, so I'm short commodities. And I can see in the video I posted yesterday that that's one of the trades that's very negative perceived, and that most people disagree with that and are long commodities or believe that it's going to go up more due to the war, and believe therefore that it's not priced in yet. But oil is at an all-time high, and so is gold, and we are in a long-term bear market. So I don't agree with the opinion that it would not be priced in. There's lots of fear in the market right now, and that means that it is priced in. Fear is priced in. So when I look at the different portfolios, some general impressions I get from the people that share their portfolio with me is that many people have a high exposure to crypto, as do I, 80% right now. But for many people, they don't have any other exposures because they don't use leverage. And so they have a remaining 20% in a little bit of stocks or some cash. And that's really not going to save your portfolio in case crypto does not pan out. So that would be one of my critiques here is, of course, it's a controversial opinion. Many people disagree, but why not borrow some money against your large crypto portfolio and invest it in something that's not so correlated? Of course, markets are very correlated. For example, when stocks go down, crypto likely will go down also. So yeah, don't put it in stocks. But I mean, there are some other trades you can take. For example, I'm short commodities. Well, I mean, yeah, during war times, stocks go down, and short on commodities also goes down because commodities are going up. So it's correlated. But there are other scenarios where there actually is an investment that could make you money even when crypto does poorly. Same with shorting bonds is something else I do. I believe interest rates will go up, and also it's an opinion I share that's very different from the most market participants, is that interest rates will likely go up. And no, it will not destroy the market. No, we've seen in the past that the interest rates can go up for 50 years. As they did from the 1940s till the 1980s, and markets did very well. So, but you can make money with a short on bonds, for example, and that's not per se correlated to crypto. So that would be my suggestions for most people. If you don't want to sell any crypto, okay, but then borrow some against that crypto. And that means that if you're wrong, and indeed that has happened with me recently also, the market's corrected a lot, and I had borrowed against DPI and I got liquidated. I lost a piece of my DPI because I liquidated, and so half of my loan was paid off, and I lost half of my DPI. That can happen, but in exchange, you can take some other investments that may not be correlated and may save you in certain scenarios. So I think, and at the same time, if you're right, and indeed crypto goes up a lot, well, then that margin loan or that collateralized loan that you have gotten from crypto won't be any problem, because your crypto goes up a lot. You will be able to afford to pay off that loan. But in case, you're not wrong, then this may be. And also your potential gains do not go down. It's not you don't even have to sell any crypto. You can just take a loan against it, which in DeFi is now very, very easy to get, and at very interesting rates. So why not? Um, um, there are strong arguments against it. Crypto is very volatile. That's true. And but you can then still play it quite safe. For example, certain assets in crypto, if you borrow only like 20% against it, then the price from today need to correct with, like, let's say it needs to go down with at least 60%, 70% before you would be margin called. So that's quite safe to take such a loan, especially considering where we are in the crypto world. It's not we're not in an euphoric climate. We're in a very negative climate also in crypto. I mean, not very negative, I would say, but certainly not positive, and far from euphoric. So yeah. Why I make this case also is because the investing needs to be done when times are hard. The moment we lifting out of this, and actually I'm a little bit too late already, because the deepest point was actually a week ago or 2 weeks ago. It should have been better that I made my video there, but still, the overall climate is pretty much the same. Stocks have gone up a bit, crypto has gone up a bit, but it's still all valid. Let me take a look at comments. Hi, welcome all to the live show. Mega bull in crypto incoming, and that's possible, yes. Hi, Cotilia. Hi, Ryan Giffen, nice to see you. Cryptech Dev asks, how is my family doing? I'm very, very well. I have a new baby. From Felista has a new baby a month ago. His name is Jason, and I'm the happiest man. And so, a new brother to the family. And with my other girlfriends going very well also. Tabby and the children, Joy and Martin, are very good. And also Mikey is very good. So I'm a happy man. I still have quite some challenges and problems in Kenya to solve. But overall, I'm doing a lot better than a couple of months ago. And my family too. But yeah, I think as an investor, we need to do it when times are tough, and that's today. And today you need to be investing so that you don't have to do it later when it's too late and when the markets are running away from you. Because that's not wise. Now, what's very helpful for me is turn things around. Like, if you want to be a successful investor, you have to be a useful investor. And you have to make yourself useful, and because there is so much fear. When commodities go up a lot, it's very scary to short commodities. You can go broke on that. Or when crypto goes down a lot, or your growth stocks go down a lot, it's very scary to buy more of it. It's very difficult, but that's what you need to do. And how do you do that? Well, if you think from another perspective, not from the making money perspective, but from the how can I be useful here? What does the market need right now? Well, if everything is crashing, do you need another seller in the market? Will you add value by being another seller in the market? No, because there's already plenty of that. You can only add value there by being a buyer, because that's what the market is looking for. There are not enough buyers. There's a big shortage of buyers. Nobody wants to buy it. So if you do so while you're offering something of service, and inversely, if everybody is buying it and the prices go up, are you offering any value, adding any value to the market to be yet another buyer pumping up prices? No. You should be a seller then, because that's how you lower the prices. That's how you satisfy the high demand, by offering your supply in the market. But of course, you need to therefore also work the other way around. So Janos Pakani asked, did that situation in Kenya made you think that actually the European more regulated countries are not that bad to live? Yes, I have come to revise my view on the world with what has happened in Kenya with me being falsely accused is very tough, um, and it means if you don't have security in your house, then you can't do much else. And so a just system is very important. Of course, you, do, it's never nowhere it is perfect, but there is a clear level of how fair a country is. Like some countries are a lot less corrupt than others, or have a lot less corruption going on in their ranks than others. And so yeah, I think I've come to value the Europe a lot more because of it. There are always advantages and disadvantages, um, but I mean, I couldn't have found, or it would have been a lot harder, I think, to have found the girlfriends that I wanted here in Europe than in Africa. Um, because it's harder to find a young girlfriend here for an older man, especially if you want children and you don't want to wait with making children. It's going to be a lot harder. So yeah, but indeed, stability is something that's lacking there. Um, So Janos Pakani is asking, can we have a contrary point of investing in oil? The inventory is down for a number of months now, while the most active driving season. At the same time, major banks refuse to finance ONG. Janos Pakani has an in-depth view of oil market, which I don't have. But yeah. mm, Um, what he's saying here is that so your money is of use for them to increase production. So if you buy oil, you now you're pushing up prices, and that's useful because that will increase production. Yes, but oil prices are already way above production cost. So you don't need higher prices for production to increase. At current prices of, what is it, $110 or so. What's the production cost of most oil producers? It's around $50 or so. Is my guess. I could be 30 also, but it's way lower than where we are. And so even at current prices, the most inefficient oil producers will restart production. So that's not the case, that we need higher prices for enough production to come online. No, we already have those prices. So I don't think your argument is valid there. Um, Let me take a look at the portfolios here. D. Eli, thank you so much for your feedback and your support of the show, and your also good and critical questions. Um, um, he also made a post. Look forward to the Master Investor episode of Mark de Meesel. Many interesting things have been happening. There's a strange bull crypto run. Agreed with that. It's the first time that's been so slow, and that we almost at fair value again, even though we went into serious overvaluation. We're almost back at the troll trend line, and that didn't happen before. Though before we have had also breaks during a bull market, but this is certainly a much longer one and a much more difficult one. But I think this is easily explained even without all these troubles in the world, that cycles take longer over time, gains go down over time. So it was only normal that the next bull run would be less steep and would take more time, and therefore would not be as impressive and more difficult to hodl during that period. But with the different things that have happened globally, the fundamentals of crypto, they continue to be strong and become stronger. There is some negative developments, of course. Also, some countries ban crypto as a payment system or put extra legislation and regulation that slows down crypto adoption. And that happens also. But at the same time, world events show to people how valuable cryptocurrency is as an alternative asset class, how important it is to have money that cannot be frozen by the state, that cannot be inflated away by governments. So the fundamentals keep improving for crypto, while the price, I would say, is more lagging. So I think that train is still well on track. The Eli also brings up the inflation run. Like there, I have already shared my opinion. I believe that there is no shortage of commodities. Yes, prices have gone sometimes parabolic in commodities, but that's because of fear of war makes people to stockpile a lot more than was available in the market, but it makes prices go way above production cost, and so it's only a matter of time before these prices go down again, because there is enough production capacity. One moment, there's a machine making noise here. Of course, we can't estimate how badly a war will escalate. The fear now is that this war between Russia and Ukraine will escalate into a world war, and that's also my fear. But the chance for that to happen is not high. It's not the first time that there's a war there. Actually, there was 5 years ago another war there between Russia and Ukraine, and actually 10 years before that also. So it's not. Of course, the world is reacting a lot stronger now, but it's very dangerous to let the media and the fear that's always portrayed in the media that the world is going under. To let that guide you in your investment decision is the best way to go broke. You have to have a positive mindset and think. And think differently. Is it a black swan event? This war in Russia, a world war? I mean, for those that are in the know, it's not a black swan event, but for me it is, because I wasn't totally not busy with that. But there are some people actually have predicted this to happen. So those are the different talking points of the Eli. Thank you so much. And he also shared his portfolio. He has 77% crypto, and then 13% stocks and 10% cash. I think this is not a time to have cash, so I would certainly invest the cash in something. He has some 13% stocks. It's almost all space is Virgin Galactic, and then a little bit of Palantir. I would say that's not a really. Of course, something like Virgin Galactic. Actually, I also invested in following his lead there. I lost a lot on it. It went down from like $50 to $20, $25. Then I bought, and then I dropped to $5 or $10. I have let go of it and locked in my loss, because I replaced it with funds from the investors group of Catherine Wood. Simply because, with also the crisis I went through, the personal crisis, I want to have a more simple life. Also become a more a family man, and I can't spend so much time on investing anymore, and that's why I prefer more and more funds, whereas picking my own preference or my own stocks is just more work that I don't want to do. But of course, if you look at the returns, having in your stock portfolio only a company like Virgin Galactic may certainly outperform something like the ARC funds. But of course, it's gonna cost certainly more follow-up work, and yeah, I'm not sure if the risk reward is as good, because yeah, that's just one company, and yeah, it can fail. There's a lot of variables that need to go right. But if you invest in something like an ARC fund, okay, the potential returns are not that high, but the chance that you're gonna make returns is a lot higher. But okay, if you have a really strong thesis that you believe in, then you could do that also. In his crypto portfolio, he has a very large exposure of DPI, and then a smaller exposure of DXD, and then some very small exposures of sushi. Yeah, me myself, I have also like a very large exposure to Bitcoin Cash, and then I have also some DPI. These are my two biggest exposures. Yeah, I think DPI actually, because it's a fund, and it's a combination of different crypto protocols, decentralized finance, DeFi crypto protocols. Yeah, it's a good investment, but there is also counterparty risk there because it's a smart contract, and this can also fail, and then you can lose everything. And so, yeah, having like half of your crypto, for example, invested in a smart contract seems in one smart contract is a high risk, I think, even simply because of the counterparty risk. But yeah, I think someone like the Eli, like so many, have lots of actually in-depth knowledge about crypto world, and they have studied the market well, and they know some smaller projects that actually have good potential. Well, yeah, maybe put a little. Oh, yeah, he has actually a bunch of those. He has in total about 6 projects that have 5% or less. And so, yeah, I think he has a good portfolio, and he will do well. Let me take a look at other portfolios. And first, the comments. 34 people, welcome all. I have not studied Palantir stock, so I don't know. I don't have an opinion on it. Brian Muritu asks, where do you start as a beginner if you want to start investing or trading? Well, you have to put your money at work, the little money that you have, and learn the hard way what not to do, and at the same time read. At the time when I started, there was no internet yet, and so I was reading books. I would go to libraries, I read lots of books, order books. Actually, there was internet, but books were still very much in. And so I ordered lots of books around 2005 about investing, and that got me started. But at the same time, first I also put in money in the markets and lost it. That's also what needs to happen to learn, usually. So that's what you can do. Someone's asking, are there real estate opportunities in Africa, or is the legal situation too weak? I've noticed that the real estate is quite very, very popular there, and yeah, it offers quite some security for people, but it also, land has gone up a lot in price, and everybody is basically investing in land or in real estate, and very few people invest, for example, in the stock market. So that's usually not where you want to go to. You want to invest in something that's not popular with your auntie and your grandpa and your brother and sister and your friends. If they think it's a great idea, then it's probably not a great idea. But if they think like, oh my God, what are you gonna do now? You're gonna lose all your money there, then you're probably on the right track. And you're much more likely to get such responses if you invest, for example, in cryptocurrencies or in the new latest things. It's not DeFi, but it's NFTs or the metaverse. I've not studied it all in detail there. Those are the latest trends, but Those are the kind of things where people say, oh my god, that's a scam, you're going to lose all your money there. Well, look into that, because that's probably where there is real money to be made. It's even if you have only small amounts of money. Also real estate, yeah, so that's my answer. Omar, yeah, a weekly live stream, indeed, that's not gonna be possible. um, so let me go to another portfolio. Mm, So we have FM Farid Farshid Mahmoud 8 on Twitter. He has 25% in oil stocks from Canada, 25% in tin stocks, 15% in uranium, 15% in Palantir and Voxtur, and then also 10% precious metals and 10% copper stocks. And then he says, suffice to say, I'm absolutely killing it. So he says his returns year to date are 20%, and this is a month ago, or 3 weeks ago. So this is an example of a portfolio that I believe is really a bad portfolio, that is betting absolutely on the wrong things, and investing in things that are not needed in this world. I mean, it is needed, but there is not more of it needed. And that's why you shouldn't invest in it. For example, 25% Canadian oil stocks. Well, those are probably stocks of the tar sands and oil sands projects. Like, I agree with Katie Wood that very likely oil has peaked. The amount of oil that's being produced and consumed has probably peaked very recently, a few years ago, right before COVID. And we will not use more oil over time. Um, why? Because the biggest oil consumer is the car, the automobile, and it's being replaced by electric. And this is in the beginning slow and then suddenly very fast. That's how these kind of changes happen. And now you see still 90% of cars or 95% of cars drive on petroleum, but in 10 years time it will not be that. It will be maybe 20%. Like, it will be a lot lower. And so where will all that oil go to? Who's gonna use oil? So Canadian oil stocks, they are producing oil and have a higher production cost than the common countries like Russia or Saudi Arabia. They have very low production costs, and Canadian oil sands and tar sands can't compete with it. Yes, today they can at $120 a barrel, but the moment oil prices correct again to their production cost, because in the long run commodities always go to their production cost in price, then these projects will be put will die. They will not produce oil. 15% uranium, yes, uranium, but he's talking about just uranium. Uranium is a commodity. Even if nuclear power is the future of electricity production, with that I agree. Like, it's so underinvested. We need a lot more nuclear power facilities and innovation. You have fusion, but also have fission, and you can do so much with that. But uranium is only one of the commodities that's used there. You have other commodities that will likely be used in the future, and it's still just a commodity. Commodities in the long run are bad investments. But I haven't studied uranium. This particular commodity could indeed have a good risk-reward ratio, and indeed there might be a lot more of it needed. and it might still be important to push up the price there. But I haven't studied it, I can't judge it. But it would be one of the more promising commodities of them all. With that I agree. Tin stocks, I have no opinion on it, but of course it falls under the commodity sector. A leveraged long on precious metals, I believe, is not wise. Gold is at an all-time high. The production cost of gold is a lot lower. I made lots of videos about gold, and all these are still standing. These arguments that this is not the start of a bull market of gold, because the typical things that happen at the start of a bull market have not happened, such as the total amount of supply and production of gold should collapse because of low prices. That's the end of a bear market, when it's so cheap that the production collapses. It hasn't happened in gold. Production has continued to go up and up and up and up, because gold prices have continued to be a lot higher than the production cost over the past few years. And actually, since 2000, we're now 20 years later, since 2000, since the prices have started to go up, that was the start of the bull market. And then 2011 was the peak. Then you have a correction, but prices have continued to be a lot higher than production cost. And production, if you look at the production graphs, have continued to go up. So no, there's no shortage in gold. Maybe, of course, now temporarily there's some shortage because of the fear of war, and before it was COVID, but no, I think they're gonna lose money here likely. Yeah, so that's my opinion on that portfolio. Monero XMR asking, do you have a target to reach before you will stop investing and enjoy life, or do you plan to invest forever? I think investors are like entrepreneurs; they never stop. Huh? Most of them. I have some rare examples of people that really put an end to it. But if you have organized your life well, then you have found something that you really like. Huh? It's like a hobby. The best life to have is if you can make money with your hobby. And that's what happened for me. And it took me very long to find that. I tried many different things. I tried making video games, making movie. I tried programming. I tried architecture. Uh, but it was never for me, and I failed with everything. But when I with investing, I really tried that also. But there, yeah, I did it better, and once you become good at something, it also is a self-fulfilling prophecy where you want to also even learn more. And so it's a hobby for me. I will keep on doing, but the amount of time I put in goes down over time because while I become older, I sleep more. And yeah, my interests are shifting. I don't want to be the best, the desire to be the best in something and to stand out goes down as I have found my partners, and I'm starting a family. It's the animal behavior of these young guys that want to really stand out because they want to find a good mate. But once you have your good mate, there's not then your focus shifts. So I think I will keep on investing, but just less over time, and also outsource more. Um, and yeah, there will come a time also when I am not actually such a good investor anymore. I hope to achieve that in my life, just like all great talented professionals become less good over time in what they do, because well, the younger generation has more energy and has the newest learns the newest things, and and just beats you, and many of the people that I follow me beat me in performance, and I'm very happy for them. um, Hi LA Matt, hi Jan van der Rijn. uh, um, Okay, let me take a look at another portfolio. So I also shared on noise.cash, and some people also shared their portfolio there. Pantera 99, 50% Bitcoin Cash. I noticed that they have more Bitcoin Cash exposure there. 20% smart BCH tokens and NFTs, 10% Ethereum, 20% Ethereum NFTs and ERC20 tokens. He says he's not very diversified, but he has sold many coins and he has also only kept the best. Good for you. Simplicity is very important, and that's also why I have kicked out my airlines. I still have a few of them, but I kicked out all the time. Because the moment I'm getting interested in new investments, it's good also to get rid of the other ones, sell your losers, so to speak, but even sell those that, yeah, they might still turn winners, but just your interest is shifting, and you don't want to have 100 different investments. Even 10 is a lot. Like, you want to keep it down, trim it down. I think there's a lot to be said for less is more. It's something I learned in architecture, but when you build a building, you want to keep it simple, and as little as possible, and that's true in a portfolio also. So yeah, 50% Bitcoin Cash, I would say that's a high exposure, but I have the same. Bitcoin Cash, yes, it's not been performing well price-wise. It has been done so bad. I was really wrong there. It continued to drop market ranking to now 25th place or so. Now it has just the past few days went up a bit, but it's still only at like $350 or $400, and the market cap, yeah, is maybe 5 billion or so, or 10 billion. But I do think that when all is said and done, cryptocurrency has value if it's used as a currency, if it's accepted by people, if there's infrastructure built around it. It will find, if it's managed well, it will find adoption over time. There is some evidence for that for Bitcoin Cash, though it could certainly be a lot better, but these are still the early days. Ethereum is certainly outcompeting Bitcoin Cash in so many metrics, and has done extremely well. But yeah, they are different breeds, they are different coins, and there is room for different projects. And something that, like, I lost again 80% of my portfolio, and the reason why that happened, before I said, of course, yeah, what I have done very wrong in the past is sell your winners and buy more of losers. That's wrong. Like, actually, I've invested big in Ethereum, but then I've actually sold it all for Bitcoin Cash. That was not the right move. I should have kept Ethereum, maybe sell a little bit here and there, but yeah. But at the same time, what I also want to change in my portfolio approach is that when you have winners and you keep them, you don't sell them, and you only sell your losers, well, after a while, you have very concentrated positions of your winners. And is that safe? Well, I mean, if you look at it logically, you invest in 100 different projects, only a few become winners. If you just keep them, yeah, then you'll have made it. That's true. But the reality to get there is very, very difficult. Because the markets are so volatile, and so even if you have that winner in your portfolio, and he becomes 90% or 95% of your portfolio, well, even winners will correct a lot, and they can do minus 50%, even minus 80 or 90%. And what then? Yeah, if looking back, you could say just keep it. But in reality, we are beings with emotions, and we are also beings with needs. Emotions such as fear and greed that always take a part on us and are very hard to fight, but also needs, financial needs. And so when your portfolio drops 80%, very few people are able to take the right course of action there and just hodl, or buy more. No, most people will feel very bad, that's me included, will become fearful, will start doubting whether they did the right thing, and they will sell some at the bottom at the wrong time, for something else to build more security. And that's what happens when you have very high exposure, and it's even worse when you have leverage. Then it's even worse. But so that's why I am more attracted now to a strategy where you keep exposures also in check. Okay, you have a winner, but when it goes to 90 or 95% exposure, sell some, and invest it in other potential interesting investments. Yes, it's a winner, but if you still have an 80% or 70% exposure, it can keep winning and you will do very well. But in case you're wrong, because winners can turn into losers also, there's always a point where a winner actually turns around and becomes a loser. Like if you haven't sold anything, it will all become a very painful and difficult process. Um, so yeah, but I think I'm very bullish on crypto, and I think a portfolio like this, 100% crypto, some big projects, and that's it. Yeah, and actually has NFTs also in S01E06 tokens will likely do very well. A lot depends, of course, also on age, whether you can like stand the volatility or not, and the amount of financial obligations you have. Here we have a crypto, someone here sharing his portfolio, a wrecked flip on noise.cash. So he says he has 90% in crypto, and then he has 5% stocks, and then he has 5% rare Pokemon cards. That's interesting. And also 0.1% physical gold. I think that's very interesting because actually physical gold and also cash do have a value in case of war times. What are you going to spend if your bank closes? You don't have anything, any liquid money to spend. Cash and physical gold makes sense to have some of that, just for the worst case events. But it's not really an investment. It's not an investment. It's just cash, or some physical gold on the side for expenses. That's good. 5% rare Pokemon cards. I think that's very interesting. If you're specialized in something, this is hobby material, but you can do very well. Um, and also like these are collectibles. They do well during times of prosperity, and I believe that we are still in such a period, even though there's a war going on now, and there's lots of commotion in the media and the markets, first around COVID and now around that. I believe that we are still in a prosperity cycle that started at the bottom of 2008. We had the 10-year bad stock market, 10-year rising commodity prices, but after that we have usually in the past we have 20 to 40 years of times of prosperity where commodities go down, where stocks go up, and in that cycle real estate goes up, but also art and collectibles goes up. And so rare Pokemon cards like NFTs, like supercars, like paintings are in the category that will likely do well over the next 10 years, just like growth stocks and crypto. However, that's not the case for gold, physical gold, and commodities. They will likely not do well. But yeah, he has really bet it all on crypto, 90%. And the other investments will have a hard time, therefore, catching up if crypto goes bad. Within his crypto portfolio, he has almost everything in BTC and only a little bit in XMR. And that's it. And that I think is really a poor selection, wrecked flip. You're gonna get wrecked here. Of course, I've been very wrong in my prediction of BTC prices and market cap. I had expected it to do more poor, the market dominance or market share of BTC by this time I would have expected to be a lot lower than it is. So I was wrong there. But yeah, um, I would certainly not invest 3/4 of my crypto portfolio in BTC. I believe that that's really not a good idea. Monero, I think, is a good investment. So yeah, I hope that was of value. Yeah, you have 5% stocks, so it's a small position. It's not really worth it to discuss the different positions there. Let me take a look at the comments. What are the best investment opportunities that the Ukraine war creates? This is a personal question, and it depends really on your perspective, where you are. Usually, the investments that you have already been eyeing before a crisis suddenly become a lot more interesting. And that's been the case for me too. But to go to and invest in the assets that have been destroyed due to that crisis can be a good idea or cannot be a good idea, depending. But of course, there's also legal risks. So I leave that to you. But for me, I just took advantage of the situation to invest more in growth stocks, and therefore sold my previous theme stocks. You could say airlines were a theme stock during the COVID crisis because they were really harmed a lot, like cruise lines, airlines. So that was a good investment at the time, and probably the same will be today for Russian stocks and maybe Ukraine stocks, and like they have been tarnished also. But okay, there are legal risks there also, and for me, my appetite has gone down there. You have financial risks, that's one thing, but you also have legal risks, um, of course, in the beginning, when I invested in crypto in 2012 for the first time, there were legal risks also, because there was no um, uh, government institution had not really made any declarations about whether crypto is legal or illegal, or some. Actually, it was the ECB that made the declaration about it, that showed that it was not illegal. That actually convinced me, okay, I can invest in this. But it was the only one. There were, for example, in the United States, there was no bigger government institution that made any declarations yet. So there was still a lot of legal risk. But I was, a lot younger than 10 years and a lot poorer, and that also makes you to take more risks. And so because, well, yeah, you have to, if you want to make money. But yeah, for me that has changed, and therefore, for me, I'm not going to try to take, for example, investing in the Russian stocks. Financially is very attractive, but I don't want to take the legal risks there that could cause problems later. Um, um, but yeah, for me, I was already short commodities. I did make some mistakes. I was over leveraged, but I was only short gold, and I flipped that. Actually, now I'm short the more broad commodity indexes, and I'm also short like more oil, and less gold. But I'm still short like 20% of my portfolio in commodities. But yeah, there it's because of making some mistakes in the past that I did not increase my short on commodities during this war event. But I think that would be the right move for most investors, because most investors have no short on commodities at all, and or even long commodities, and I think that's really the wrong trade. Um, um, but I also think really that growth stocks have gone to serious, sometimes really ridiculous valuations. I discussed this also 1 month ago in the Master Investor episode there. Stocks at the time, what was it? Zoom and Netflix and yeah, I mean, strong companies selling for valuations 3 months old, or valuations that were even lower than pre-COVID, while in the meantime they have tenfold turnover. So these kind of things have happened now with growth stocks, and yeah, great moment to get in. And it may take another 5 years before you get another chance to get into nice growth stocks, huh? Um, and I think emerging markets probably also really an opportunity. Of course, I mean, if the war escalates into world war, take that off the table. But you have to weigh probabilities, huh? And I think that China, for example, although there are certainly some negative developments going on there, it's a very autocratic country, and there are crazy things happening there, like with the founder of Alibaba disappearing. That's very concerning, huh? Um, um, but um, but if you look at just how the world evolves, China is indeed yeah, doing very well economically, and very likely will continue to gain serious market share compared to Western equities and stocks. And so, but that's true for also other emerging markets. I think we have seen a bull market in stocks that's now started in 2009, so already 12 years old. And and so the next stage actually, you also have actually European stocks. They like the best goes up first, huh? Average goes up in the middle, and the crap goes up in the end, huh? And usually the best when it comes to stocks are US equities, huh? The average is maybe European, huh? And then the crap is, you could say, emerging, huh? But so where are we in the cycle? Well, European has done very poor, so maybe that's where we are. Huh? But at the same time, right now there's really also lots of negative sentiment around some emerging countries, and I think are an opportunity also. But I haven't invested myself. Looking at the comments here. So Mantugo, hi, nice to see you. Bitcoin Jason, nice to see you too. Swordfish, nice to see you all. Thank you so much for coming back after such a long time. Um, he's asking, what do you think of my portfolio, Mantugo? He has 80% real estate, and then he has also 15% gold, and the rest we don't have to mention because we're already at 95. Huh? Um, Real estate 80%, for me, I don't find that interesting. The returns depend on the leverage that you took there. If that 80% real estate, um, I mean, if that's your 20% down payment, and that means that you're actually you have a leverage of 5x on that, yeah, that can do very well depending on where you are in the world and at what interest rate you have those loans. But if that's like paid down real estate and there are no loans there, there's no leverage, yeah, what's the expected return? You can calculate it. It's not high, huh? It's actually, it depends what country you are. If you're in a fast growing country, the value of land can go up, huh? But the value of the stones will never go up, huh? It only goes down, huh? It's only the value of the land that can go up if you are in the right region. There are also many regions where the actual real value of the land goes down because you have to count for 5% inflation, huh? If you count for the real inflation of 5%, you will see that actually many investments in land actually go down over time, huh? But actually, you can take inflation also higher. And 5%, I think, is a fair estimation, but you could also put it a bit higher at 6 or 7%. But so I think expected return of real estate is not interesting. Um, if you don't have leverage, huh? If you have leverage, is a very different story, because you can have fixed interest, fixed mortgages at 2 or 3%. That's crazy, huh? Like that's making money, huh? Because real inflation is 5%, and when you look at land prices, how much do they go up?